What is up, ladies and gentlemen? Kyle Williams here. As always, same way every time. One of these days I might be creative and start this video differently. But end of February, February is over. Made just over $87,000 with $3.52 to spare. Very happy about this month. I mentioned this on Twitter. It wasn't really any specific big grand profit, right? Granted, I did make the most of my month on the 6th. However, it wasn't even due to any one play. It was due to a sector, the AI sector, which we will talk about. But, ultimately there was no really big winner. It certainly wasn't like January where I had, two huge wins on the 23rd that made up almost, call it 90% of my month. Not like that at all. A lot of consistent wins. It's why you kind of see my average loss to average winner much closer, where my average loser was pretty tight. Besides the 3rd of February here, we will see why. But any other red day, kept it very, very small, ultimately leading to a very small average loser. However, on the flip side, my average winner wasn't as big. My average win was $4,000, right? Granted, again, had plenty of wins bigger than that, but also had a lot of wins smaller than that as well. So win rate is pretty good too at 67%. So ultimately, I would call this month a month of more singles than a one or two grand slam home run. So quite a few more trades to go over in this month. Let's jump right in. Week number 1. Again, not much meaningful. This just small win, small loss day. Really, what is the most important here is the 3rd. And now, so what happened on the 3rd? I briefly mentioned what it was at the end of my January recap, which was Tesla. So something that happened to me last year, or actually ironically around the same time, not so much in February, but more so in March and April, I really caught fighting this bounce, and I got chopped up a lot. Ultimately, I think I covered literally the high of this last day, and since then, Tesla still has not touched that price. Like, I was like the last person to touch this high, and it's been down ever since. So I have a history of getting caught up and chopped up with Tesla. And for whatever reason why I keep coming back, I don't know. I think it's because at some point I end up being actually right. I end up actually having a correct read on the stock. The problem is the patience that I need to actually time it correctly without taking so many losses on the front side. So one of the things that happened and ultimately why I lost so much is because I actually made money here in January. I think I talked about that in the January recap. But as I kind of got comfortable and confident with it here, it led me to then going down the rabbit hole of taking too many attempts. And it's all a blur really to me. Unfortunately, I really don't remember a lot of these losses I took. A good thing is a lot of them were 2, 3K, 4K losses at the smallest. The problem was where I really just kind of lost it and lost discipline for a quick second, ultimately led to a much bigger loss, which is on the 3rd of this day. So the key here is I wanted to look for a day that a sign of weakness, right? I try to, as much as I tried to be specific about picking an entry, it still wasn't specific enough. And so for me, I thought the fact that it was gapping down the first time in this run, at least since these last 3 or 4 days, again, we're up from 100, or we're at $100 at the beginning of the year, now approaching 200. It was just a huge bounce. I thought some kind of air would need to come out of it. And so we were gapping down, and I thought to myself, great, this is a great opportunity, especially after wicking super hard on the 2nd, failing to even get to 200, that we could, pull back into the below 180s, into the 170s. If we actually go to that trade, on 3rd, I don't even know if we'll have it. I shouldn't be able to have it if I go back a month. But you see there, it gapped down, and it didn't end gapping down, right? It quickly came back out of the morning, and I just got super freaking stubborn. It's the best way to put it. So here it is right here. So again, here's the huge wick day, right? Big wick, couldn't reach 200. I'm thinking to myself, great, this is the backside. It's going to pull back. And you see here that is just not what happens. We squeeze right off the open, and my trades here are pretty frustrating when I look back at them. Here they are. Let's zoom out here so you see them. I mean, from the morning, I immediately get short. instead of risking red green, I add. And in my mind, I'm thinking like, well, I wasn't risking a key level to begin with. Again, partially why I didn't even cut it, because in my mind, I knew the real number that mattered was like the high from yesterday, which was, what was it? It was like 190 something. It was 197, right? If not 187, also 200 should have been that level, right? I was kind of thinking that's really the risk I should be playing off of. And so what do? I kind of take the same size I have and just increase my risk higher. Not a good idea, right? Ultimately, I knew if I stopped that at 200, it still would have been a manageable loss. It would not have been a disastrous trade that I've never taken or seen before. But clearly, I ended up losing 17 grand on this trade. Still too much, right? It should have been well under 5 figures. If it was 10, that would have been okay. But to really like take as much size as I did and then change my risk from I don't even know, from red green to the 190s, then from previous high day and then the 200 in my head, without downsizing is like the mistake. And ultimately, you see me actually end up cutting it before it even broke the last day, or actually when it broke yesterday's highs. Because I thought to myself, like, I finally came to the realization, like, what are you doing? You changed your plan. You didn't adjust your plan by downsizing to the accordant, like the actual accurate risk size per distance to your stop. And so I just cut it. Tried it one more time late day because it looked weak. Ended up news coming out that I think Elon is no longer liable for his tweet where he said he's taking Tesla private at 420 or whatever it was. You remember that whole kind of not scandal, but scenario that played out. He kind of came out saying he's not going to be liable for that, I'm pretty sure. So that spiked the stocks. I was like, no, like I do not want to deal with this. So I covered. Again, lost like maybe an extra $1,000. So overall, 17 grand on this ticker. Should have been much less, but I just let it go against me too much. I tried to change my plan to ultimately what I think was a more accurate risk. Again, the issue was not readjusting my size to fit that new plan. So again, took that loss. It sucks. It's not fun, but again, it's on the bright side. I looked at it on the bright side in the sense that it could have been much worse. I could have been in no way did I feel like I was fighting. It was just a matter of, again, like I said, changing a better risk level that I should have had from the beginning, and unfortunately didn't readjust my size in the process of readjusting that better risk level. So that's that. However, I actually do end up I finally end up nailing Tesla later, which we'll go over later in this video. But really the biggest day, like I said, on the 6th, this was because of the AI sector. So those who are watching the AI sector, AI here, artificial intelligence, the whole ChatGPT thing is kind of caught wind, and that really ignited small caps with AI being a hot kind of topic. And so AI kind of being the leader, right, literally in the name AI, they got a pretty cool ticker there, is really the leader of this run, right? It was starting at the beginning of the year down near 11, hit a high of nearly 31. This run really powered a lot of it. And so I didn't really make much money long on AI here, but I made money long on a lot of other stocks, the sympathies. Like SOUN, I was long overnight from this day into this day. BBBY, I was long overnight from this day to this day. The biggest winner of them all, GFAI, I actually was had the most size on this one, being kind of a true penny stock. I say a true penny stock, and you look at it at $7.30. You're like, that's a true penny stock? Like, they actually did a reverse split. They did a reverse split. I think it was on this day, on the 9th. And again, I played it from the 3rd to the 6th. So literally right before they did a reverse split, this thing was once at 30 cents. Now it's at $7, right? So it was kind of the crappiest of the crap, which again, if you've traded penny stocks long enough or small cap stocks long enough, if you know some of the crappiest ones go the furthest, ironically. So I did actually make of the 55K I made that day, 25 of it was GFAI, which is what you see here on the biggest profit day. So GFAI was, if there was one big winner that I had this month, it was GFAI. And so let's go into the actual trade again. Let's see. And so for those who, oh gosh, that shows the reverse split here. That's funny. Let's see if it'll show it here. There we go. Actually, this is good. So my whole thesis, again, and for those who don't know, when sector momentum hits, when a hot topic hits the market, whether it's weed, whether it's crypto, like Bitcoin right here, right in the background here, whether it's magic mushrooms had a little theme, whether it was electric vehicles back in 2021, if a certain hot sector catches wind, it doesn't matter how good or bad the companies are. If they're in that sector, they all run together. And so that's kind of what happened. And I've seen this enough times. Where when it happens, for me, it kind of turns into a fire at will, right? And I don't mean that's in a risk management lackluster kind of way. I mean that I'm still having trade plans. I'm still managing my risk, but it's the risk is on, right? I'm willing to enter numerous more positions than I'm normally willing to enter because all I need is one sector to move in unison and the whole sector goes together. It's almost like it's one big trade, even though I'm in maybe 4, 5, 6 tickers at one given time. So GFAI, again, the whole sector is running hot. GFAI is up a lot. We ran from the low 20s up into 30, but we hadn't run as hard as some of the other ones yet. And so I thought to myself, this one's a little bit behind. It's got AI in the ticker. It's a hot name in this sector. I thought to myself, if this is going to go, it should do it today. And so you actually look at my trades here. Let's get rid of Tesla. I took this in my E-Trade account, so I don't have my actual transactions like screenshotted saved, but I just drew it. That's what I do when I take a trade with E-Trade. Started in when it pushed over 30. Again, a little bit of chase, but I just wanted to be in just in case they really just started ramping it. We pulled back, and then I thought to myself here, right under, it doesn't show, but VWAP was here at the time. And I thought to myself, again, if it's going to go, it needs to if it's going to look healthy, if it's going to look like it's going to continue higher in that day, it needs to kind of bottom around right here. Any lower, it would look like it's kind of dead. It looked like it kind of cracked. And so I bought a lot. I think the most I had was 100-something thousand shares. I didn't have over 200,000 shares, but I definitely had over 100. For simplicity, let's call it 150, right? 150 at like a $30 average or 30-cent average, maybe like 29 at best case. And then it was a mating game, right? I watched the rest of the sector heat up, all the other stocks go higher, and before you know it, this thing is running at a bigger percent gain than all the other ones combined. Not combined, but all the other ones together. Mainly because, again, this was the crappiest of them all. It had a pretty low float. Therefore, it can have the biggest percent move higher. And so I sold partials, pieces into here, sold a little bit more up in the 50s the next day when it gapped up. Unfortunately, I did sell the rest at red green. Reason being is because actually the rest of the AI stocks actually went higher, yet GFAI was dying. So when GFAI was dying, I kind of got a little bit convicted. I thought to myself, every AI stock is going higher. Why isn't GFAI going higher? Let me hold out a little bit longer to see if it can recover. Unfortunately, once it went red, I kind of threw in the towel. I said, screw it. I don't know why it's not following the sector anymore. I'm not here to find out any longer. Let me just get out. So unfortunately, gave a lot away here. I think if I actually had sold it all up in the 50s, it would have been like almost close to 50 grand, instead of I only made 25. But again, not going to complain about making 25 grand. That's awesome. Just very unique here where this followed the sector and then it didn't. And unfortunately, it didn't at really the most critical point where most profits could have been made. So I don't regret not selling it up here because, again, if in a traditional sector, it should have followed it. And if it did follow it, this thing would have been gone above 60. I would have made much more. So don't really regret those sales. Don't regret waiting. Really wanted to see the rest of the sector play out. And that's kind of what the rest of the sector did, right? If we go to AI here, this was the next day. Again, I didn't take AI along overnight, but I eventually shorted it. So after the morning spikes, we started dying down. You actually kind of see this trend line. I'm not too big on like trading trend lines, although I've done it more recently this year than previous years. Kind of every little higher low, and then all of a sudden it breaks that low. You see me get short, add a little bit here, ended up going to red-green, and I just covered the rest as we looked like we were bouncing. I thought we were actually going to go lower here. Turns out we held again, and it bounced. So never really played it again, but locked in, I believe, like $6,000 here. Same thing for SOUN, again, on that day where it gaps up. Unfortunately, I don't have a picture of my entries, but I was long overnight from like 290. Ended up selling here near 4. Got all out when I thought it was going to break down here. This is kind of close. This started getting closer to when, actually no, it was more here. But I just thought the AI sector started getting weak after this morning spike. I really didn't want to give back any more gains on the long side. You see me actually try to like buy it a couple more times. Ultimately, got out for break even to small losses. And then these are when I actually started shorting it. Shorted it there and then covered down here. And again, all of these were somewhat following each other. So you see how they're very similar in the sense of like trading AI, right? I kind of got short on the trend break and then covered near red. It wasn't red-green for SOUN, but it was near red-green for AI. And I'm glad I did it because, again, the rest of the day actually bounced much higher than AI did. So that's that. Same thing with BBAI. Again, this is why I say, all of these. This was a month of singles, because during this day, besides GFAI being 25 grand, everything else was like 4, 5, 6K winners. I mean, everything. So all the longs was 3 to 4K. Then the shorts were another 5 to 6K. Again, here a lot was long overnight BBAI. Again, sold here in the sixes, sold here low in the low sixes. Ended up getting a lot when I thought it was going to crack. Got short a little bit late. Ultimately, I think the short on BBAI here was actually more of break even. It just wasn't, a little more choppy. Ultimately, protected myself again when everything started bouncing. BBAI, of course, followed. And that was that, right? So kind of all these tickers kind of clumped into one. But, on the sixth here, when everything just kind of sped up on that last day, was the time that I just nailed a bunch of them. Same thing for then on the 7th. The 7th was a 15K day because I did the same thing. I kind of then shorted all of them and made another 3 or 4K. I think I shorted AI for a little bit here. I shorted SOUN for a little bit there as well, and BBAI. All these had their kind of first sector red days. So again, they just added up. None of them were any one huge win. But when you have 4, 5, 6 tickers in a single sector and you take half of them, and all of them kind of end up the same way, that's kind of how it went there. So that's that. In terms of going into the next week, 13th is when I kind of quote unquote made my money back on Tesla. I wasn't going in trying to make my money back. That was not the goal. I really just kept watching it because I really wanted to be there for when I thought a backside move would come, and it came. It's hard to say because it's easy to say in hindsight that it wasn't really the backside. It ended up holding up quite nicely in the 200s. But, this little 3-day pullback from, the 210s as high as like 214 all the way down to the 189 area, this was the move I caught. I honestly, I actually thought it was going to go much lower. I thought if I was going to hold it for 2 or 3 weeks, I would have been able to get it out in then 160s, 170s. But I'm so glad I listened to myself on this last day here, which I'll go over in a minute, to just get out, because had I not, it would have gone right back to my entry and would have been a whole other mess that I had earlier, like I said, and previously in this video, talking about my first loss on it. So if we go into the intraday here, and really, and actually something I want to know before we go into the intraday, I want to go to the daily. Something to note about Tesla that I learned, again, and I mentioned it briefly when I took the loss, is looking for a trend change. And I thought I had found it, but really, it showed up much differently than what I realized. So if you notice here, it bottomed right at 101.81, right on the 6th of January. And pre-market, when it was gapping down like this, it looked like it was going to break 100. It looked ugly, right? To gap down from 110 to 102, in my mind, I think in everyone else's mind, it's like, oh my God, this is going to break 100. And it doesn't. It ends up being the low. And then 100% later, we're at 200. And so quite the opposite happened on the flip side, where it gapped up huge. I remember seeing it at 200 and then gapping up to 207. I'm like, oh my gosh, this thing's going to go to 220. This thing's going to go to 230. The bounce is going to keep going. We might be up 150% on this whole move, right? Just because there's a peak, whether it's greed or fear in one direction or the other. And I quickly realized this as we were kind of fading this day. I quickly realized this is what I should have been waiting for, right? I should have been looking for this kind of, because I trade Tesla so poorly most of the time, whenever I feel like I'm super scared or super greedy, I need to do the opposite, right? And so that's what really happened. I unfortunately did get chopped up. Again, let's go to the transactions here. Not transactions, let's go to the trades. Again, chopped myself up. I think I lost like $4,000, like I said earlier, right? A couple attempts, lost $4,000. Gave it a couple more attempts here, but finally I gave it one last attempt. I quickly covered and then reshorted and said, Kyle, stick to the plan. Stop being so in and out. Follow your trade plan, right? Risk the highs, get short here, let it play out into the close. We get a huge pull. That was good. I said, okay, this is the first time in a long time the trade has actually worked in my favor from the beginning, versus me, getting chopped up and losing right away, or the previous trades I show you on it where immediately I'm wrong, right? I hold overnight. Let's pull this down here. Okay, the next day, and if you remember, the next day, we actually gapped down. So this is the gap that I'm looking for, right? Again, previously when it gapped down and it squeezed right up, that, again, it it's easy to say in hindsight that it didn't work. It could have very well worked, but this was the day you wanted for the reason I said. I was fully everyone was getting greedy up here, and it shifted. There was a bigger shift in the market, a bigger kind of, again, a momentum or personality change than when I took my loss on it. And so you see here, I actually ended up adding very small. I mean, I had like 1,000 shares total. I think I added 200 shares here. I really could have. Unfortunately, if I hadn't exhausted myself so much on it after losing 17 grand on it and then losing multiple 2, 3K, 4 losses on it, I could have very well much shorted like another extra 1,000 shares of this, risking red green, which was like I think 209 or whatever, 208. Could have had a much better, like really tight risk reward, much bigger size, and taken it all down to the 193, a whole like $10 a share, and would have made well more than I could have ever lost on it. Let alone what I ended up making on it. But again, because I was so kind of exhausted, because I was already kind of on edge of even giving it one more chance as it was a very small ad when it should have been really the biggest and best time to add. Again, it's a classic example of just exhausting yourself on the front side, and once the backside comes, you don't have the juice, you don't have the emotional capacity or energy to be willing to put risk on. And so that's really what the case is here. Again, trading wise, it was great. It worked out great because I took small size, but I can't help but think if I didn't exhaust myself, I could have easily taken, instead of 200 shares here, I could have taken an extra 1,000 or 2,000 shares here and made 30 grand on $10 a share. Anyways, not the worst thing in the world. Still held overnight. So again, that one single ad was 200 shares. That cover was 200 shares. I still had this main size on, right? And so if we cancel out here, then we get to the last and final day, which was this day, right? We panic one more time. And we're now down into the 180s. And why do I cover? Why do I eventually actually exit my entire position here and void this bounce, and then actually the next day avoid it from going back into the 200s? Ultimately, in my head, I thought to myself, the original plan was, swing for another week or two, be able to cover in the 170s, maybe even 160s. And then once we started kind of bottoming here, once I realized that, another bigger bounce might come, because again, you got to look at it like this. We really just had 3 full days, really 2.5 days if you want to call it, of straight down with really no huge sign of a bigger bounce coming. I asked myself, if it came back, say in the worst case scenario, it came back to my entry, it came back above 200 and I just gave back all my gains, how would I feel? And the immediate response I got was like, I'd be pissed, right? Like I said, I'd already been so exhausted from taking so many losses on it. The thought of me giving back and giving away this gain, I couldn't even wrap my head around. I was like, there's no possible way I'm letting that happen. I need to be getting out, especially if I think it's going to bounce. Because again, there's risk reward in terms of the trade when you take it. But for me, I always like looking at the risk reward of, I would call it maybe revolving risk reward. Where's the risk reward at given the current trade? Okay. Again, up here, taking it at wherever I took it at like 210, risking 214, great risk reward. Risk $4 to make almost 20. Awesome risk reward. Okay. Down here in the same size, what? Risking back to highs, or risking back to say my entry of 210, which is again $20 a share, to then what? Make an extra 20 down at 170 if I'm lucky, right? Then all of a sudden the risk reward goes from 5 to 1 to 1 to 1, simply because the trades worked. And so I quickly realized again, would I really be willing to give back all my profits just to double them if it went to 170? I said, absolutely not. No way in hell. I am covering and taking my profits. And I'm so glad I did it, because the reality is, and again, in hindsight, you can call it hindsight bias, it never even went to 170. I would have never even gotten that extra risk reward payout. It still has yet to go to 170. Even today, I think some bad news came out for gapping down. Even now, it's back to where I covered. Freaking 2-3 weeks later. So I'm so glad I got out there. Ended up making 16 grand, so made back most of that big harsh loss on the third. So chalk it up to break even / small losses after all the other small losses with it. Again, I'm not complaining. It actually felt like I made money on it because I simply finally played it correctly versus getting chopped up and partially changing my plan like it did in the third. So stoked about that. The rest of the week here, very slow week. Didn't even trade for these 3 days in a row. The 17th here was actually the same trade idea that I actually had a few days throughout this month, which really added up to my profits, which was BBBY. BBBY here, I actually made very little, if not lost money on this big squeeze day. It squeezed really high, and then after hours they put out the fact that they're going to do an offering with hundreds of millions of shares, incredibly dilutive, disgusting financing. I'm surprised the SEC is even allowing it thus far. Anyways, I didn't really make much money on it. However, because it is so dilutive, because the people who are doing this deal, I think it's called Hudson Bay Capital, has so much shares to sell, any pop this had was like a shorting opportunity. I mean, it popped or spiked 20 cents, short. Popped 30 cents, short. I didn't just blindly short, right? But once I read the kind of the time and sales, the level 2, and found, and it kind of take a good guessing stab that this was the high, I did that. It would fade 10, 20 cents back to the lows. I'd cover for 3 to 4K profit. I mean, I must have done this probably 5 or 6 times over the next 2 to 3 weeks. This being the 17th being one day, made 3,500. I think I did it again on the 22nd. I'm pretty sure I did it on the 27th as well. Again, there's no real pattern. It's very rare I would do this, but because I knew there was a lot of dilution going on, because I knew if they ever spiked it, it was to get kind of liquidity back in the stock for them to sell more. I just joined. All I did was join the selling. So I wish there was a more elaborate way to explain that, but like that's just literally what I did, right? And you kind of see this. You kind of look in the daily here. Some of these have little like wicks. I shorted those wicks. So not a huge contributor to my month, but I think overall, over those numerous times I traded, I made like maybe an extra 10 grand, 12 grand maybe. So that was cool to be part of the month. Going into the last full week here, let's see. The only one I can really remember, actually, so again, part of this was BBBY. The other half of this day, I believe, was SRNE. So SRNE is now SRNEQ. The reason being is because they're bankrupt. And when they go bankrupt, they usually get delisted at the OTC. Hence, now it is on the OTC under the ticker SRNEQ. Originally, it was SRNE. I made 4 grand on this ticker. However, I want to note that I kind of screwed it up because of my lack of knowledge that they were going to delist. I knew they were bankrupt, but for some reason, I just did not think it through that they were going to delist. I knew from previous runners that that's what they do, right? If you file for bankruptcy and you want to still be tradable on the market, you go to the OTC. For whatever reason, I just didn't think of when the delist date was. I couldn't really find it even if I had looked at the time. Turns out it was in a SEC file they had to go digging for. But anyways, I actually don't even have, it doesn't even show the intraday here because it's now SRNEQ. It only has these last 6 days. But this red day was kind of a first red day, right? It wasn't really that great of a run. It ran from 18 cents up to 40 over like this 3-day bounce, if you want to call it. But because I knew this was kind of a good bounce daily chart, because they were bankrupt, because I believe they had like a $70 million financing that they PR'd about, I knew, again, you add up all the factors, eventually a good pullback is coming. So if we go here, let's say I get out Tesla. So SRNE, out the open, I take a starter. It spikes. I add to that starter. It stuffs. I take one final add. And from there, it pretty much works, right? This bounce actually kind of scared me. I shouldn't say scared me, but caught me a little bit off guard. When it went red or almost red here, I thought we'd see one little small bounce and then die, kind of like what we saw here. Turns out we needed one more big bounce from 39 all the way up to 42. Then we saw a crack. Then we saw the small bounce, and then we went red. And so you see me covering up here. We bounce a little bit. I re-add whatever I covered. Late day, we end up fading back to the lows. I cover it all. I avoid this bounce because I thought it just shouldn't really. It might not go much lower. It might not chop. I might chop around here for a bit and then go lower the next day. And again, this is me saying and in current present time, not knowing that they're going to delist. Right in my head, I have no idea they're going to delist the next day. And so here it is, and then just gets obliterated. I mean, it doesn't look like much, but I mean, I covered at best case like 35. It ends up nearly going to 25. Like the low was 26. And 10 cents, you might think, Kyle, that's not that much. But when you think of it in terms of a small price stock, 10 cents on a 30 cent stock, I mean, that's 33 more percent. Now, granted, I don't really beat myself up for not covering because I just didn't know. What I beat myself up on is not knowing they were going to delist, not doing the DD and realizing they are getting delisted. Because had I known that, I absolutely would have held longer. To say that I would have held for 26, probably not, but I certainly would have held for 30 cents. And the reason being is, for those who don't know, when you get delisted, there are funds, mutual funds, maybe other traders that just don't want to trade OTCs. But for legal reasons, and a lot of funds and mutual funds, they can't legally trade OTCs. They're not allowed. So when you have a stock on Nasdaq and it's going to get delisted, you got no choice to sell, right? That's a market inefficiency. And so, the reason why I really think why it just kept dying and dying is because people didn't care. They're like, this is getting delisted. I have a position. I need to get out if you're long, right? And so it died. I didn't even realize it. And so unfortunately, that's it sucks. I still made $4,000, so I'm happy about it. It could have made a little more if had I known. But it is what it is. And so that's just a little lesson on delistings. Like if you know they are getting delisted, like just know they likely have to sell. If any one of them are in. So there's that. Last week, which was the really last 2 days of February, we have. What did we have? We had LHDX and AI. I wanted to look for a breakdown here. We kind of see this little, not a big fan of trend lines, but I can't help but look at this trend line down and this trend line up that it was going to break. And so I was actually looking for this day to break. Unfortunately, I got caught up trading it on this day. You see the little wick when it wicked up. I ended up taking a loss there. Just a day too early. I ended up making back my loss on the day it broke down, right? On this day, I actually ended up shorting it into this bounce, missing this panic, and then covering it here for small profit, like $4,000. Unfortunately, I lost like $3,600 or so, getting short on this day, covering it into the spike because I'm like, oh crap, it's actually going to break to the upside versus the downside. Turns out I was just a day early. Had I shorted this day, would have been great. And mainly because earnings were coming up, and I thought to myself that before earnings actually come out, there might be a little bit of fear in the market. There might be a little, markets don't like uncertainty. There might be some sellers trying to get out before earnings. And I think that's what this was. Now, earnings actually came out and it actually is a positive reaction, so that's cool. Maybe we get another huge AI run, right? Maybe this ends up breaking highs and going to 40. I mean, I have no idea. I'm just hoping because it would reignite the sector, right? But ultimately, that's kind of a small loss and a small win to come break even on that. LHDX is a very similar scenario to SRNEQ, where they are also going bankrupt. But before they did, they decided to PR, which really brought the stock up, and then it squeezed huge. And so something that I did when it did PR and it was up 400%, I thought to myself, this is a huge gap. Like I don't see how. All right, let's get rid of the AI talk. Already talked about that there. Like 400% gap on LHDX or LHDX, which is bankrupt. Again, a stock could go up 800%, right? It could go up 900, 1,000%. We've seen it before. But given the factors, given the news, which I thought wasn't really that meaningful, and already being up 400% pre-market, I thought to myself, I'm short bias. I don't think this thing can hold up. And that's kind of what happened, right? Really didn't feel much on this candle here after it stuffed, but got most of my size on this last bounce. Traded sideways, started covering some, reshorted this bounce, covered more here, shorted this bounce, covered some more there, held the rest overnight. The next day, I unfortunately got a little bit greedy. I thought to myself, like, this should go under 40 cents. It should go lower. Again, bankrupt ticker, same as SRNE. It should be able to fade more than just 40 cents, being that it was up from 15 cents. Unfortunately, that's not what happened, right? We look at here from the opening price, really, not opening price, but from like the morning low, we never go lower. We uptrend, we come back green, or we go back green, we come back red, we start consolidating a little more. Ultimately, midday, I realized something is up. This doesn't make too much sense to me. It should not be holding up like this. I need to get out. So I ended up covering mid-50s. Again, I had like a low 60s average, so I still made money on this cover. It gave a little bit back, right? Could have made more money if I had covered it down here. But made, I don't know, call it 4 or 5K after covering it all here. Well, what's the great part about it is that I wasn't stubborn, right? I listened to price action. I don't care if it is bankrupt or not. I don't care what the news is. The point is price action was telling me something different. I get out. And ends up squeezing huge, right? It goes from 40 cents at the low all the way up to 118 at the high. And what the great part is that while it was having these huge spikes, I was just scalping each pullback, right? I got short into this push, covered here, got short into this push, risking kind of a buck because I knew it was going to wick a little bit. Not new, but I had a good idea it was going to, and it did. So I covered a little more there. Shorted it again at a lower high when it really kind of blew off to the almost 120. Covered it there. Missed this pullback, but that's okay. Ultimately, what I made back in these 3 attempts was what I would have made had I just covered it all at 40 cents. So Kind of happy about it. Like I'm glad I again reacted and then actually was able to make more money on top of it. So that's really cool. And in terms of after it, like it blew off to nearly 150, and now we're down from 150 to 50 cents. I mean, we're down 60% off the highs because again, like SRNE, they're also going to delist. I don't know if they're going to go to the OTC, but I do know by like Monday, they're going to like stop trading. So unless you want to be in a stock that's not trading or going to the OTC, there's going to be more people getting out. So that's that. The only other stock that I think was that big was AMC. AMC ended up having quite a sweet parabolic to end the month. Where was it here? Because I think AMC also had earnings and it was negative. That's why they're down. They've been down here. But this parabolic into the earnings was pretty sweet. I ended up taking a short at like $8, maybe 8.10, 10-ish. Faded it down to like $7.50. I think I made like $6 or $7 grand that day, which was again on the 27th, which was why $9 grand this day. So pretty sweet. Not the best parabolic. It's not like a huge parabolic move, but nonetheless, it is that kind of beautiful looking parabolic, kind of that beautiful parabola curve. And again, why would I short at 8? Well, because one, it's a round number. It's always good to short around a round number from a psychological level. And then 2, you see the volume. Right, I really love looking for this exhaustion volume, whether it's a low, like buying a panic, or shorting a parabolic. And clearly here, this was like when really there was a blow-off exhaustion volume, got short, risking the highs, and then it worked. Right, it could have easily gone higher. I would have had to cut it for a loss, but took it where it was, given that I had a thesis this was blow-off. It ended up being so. Again, made, call it from the low 10s, like 50 cents on it. Had like 15K shares, hence the $7 grand profit. So that's pretty much it, guys. Going into March, small couple profits. We'll talk about those next month. And yeah, we'll just see how it goes. I'm really happy how I'm trading January and February, right? If you heard me talk about my December recap last year, I talked about how I just kind of had enough with losing, taking some larger pullbacks or larger drawdowns in my equity. And I implemented some rules, and ever since following those rules more diligently and strictly, like, again, Tesla from this 17K loss has been my biggest loss of the year so far. So really, really happy about that. Much smaller than what I've seen in 2022 for those who've been following it. So yeah, I'm just happy how I'm trading. I hope it keeps going. It's only the 3rd month of the year now, and I'm already at like 60% or so of all of 2022's profits. So again, plenty. There's still 9 more months of the year. Anything can happen, but I'm just essentially long story short, like I'm just happy with how I'm trading. I'm really stoked about it. I feel like this is how I should be trading, and I'm super content with it. So hoping it keeps going. Hope we keep the good trading rolling. And thanks so much, guys. We'll see you guys next month as always. And later, guys. Peace.